Welcome back to Archive of Gold. Imagine a company whose stock price soared over 1,000% in a single year. A company that promised unimaginable wealth, backed by the British government itself. A company that attracted everyone from servants to scientists, from farmers to the highest lords of the land. Now, imagine that company was built on a lie. A house of cards so spectacular that when it collapsed, it nearly took the entire British economy with it. This isn't the plot of a modern financial thriller. This is the true story of the South Sea Company, the original IPO scam, and one of the most catastrophic financial bubbles in history. It's a story from 300 years ago, but its echoes are all around us today, in every hyped-up stock, every can't-miss investment, and every promise of getting rich quick. Let's travel back to the year 1711. Britain was a global power, but it was also deeply in debt, thanks to years of expensive wars. The government owed millions, and paying it back was a massive headache. Enter the South Sea Company. The plan sounded genius, almost patriotic. The company would take on a huge chunk of the national debt. In exchange, the government would grant it a monopoly on all trade with the Spanish colonies in South America, the South Seas. Think about that promise for a moment. The South Seas were legendary, whispered to be lands of endless gold and silver. For the average person in London, this sounded like a ticket to a treasure chest. The company was essentially saying, "Help us with the nation's debt, and we'll give you a piece of the legendary riches of the New World." Who could resist? There was just one tiny little problem, and it was a big one. Spain still controlled those South American colonies, and guess what? Britain and Spain were still at war. The so-called monopoly on trade was effectively worthless. The company had the exclusive right to trade with a territory it couldn't actually access. It was like owning the only key to a treasure chest at the bottom of the ocean. But facts, as we know, can be inconvenient when there's a good story to tell. The directors of the South Sea Company were masters of marketing and hype. They didn't focus on the pesky details, like the ongoing war or the near impossibility of actual trade. Instead, they painted a dazzling picture of future profits. They spread rumors of incredible trade deals just around the corner, of ships laden with gold heading for London. And to get the party started, they began manipulating their own stock price. The company started lending people money to buy its own shares. Think about how crazy that is. It's like a car salesman lending you money to buy a car, then using that sale to claim the car is now worth twice as much. This created a feedback loop of pure madness. As more people borrowed to buy, the stock price went up. As the stock price went up, more people wanted in. The price of a single share of South Sea stock began to climb. At the start of 1720, it was trading around 120 oars. By March, it was over $300. By May, this irrational excitement spawned hundreds of other ridiculous get-rich-quick schemes known as bubble companies. There was a company for making a wheel of perpetual motion, another for trading in hair. My personal favorite was a company that was advertised for carrying on an undertaking of great advantage, but nobody to know what it is. People literally invested in a secret. That's how delirious the public had become. The South Sea directors weren't just watching this happen. They were pouring gasoline on the fire. They were insiders, and they knew the whole thing was a sham. While they were publicly talking up the stock, they were privately and quietly selling their own shares to the gullible public, cashing out for millions. They bribed politicians and members of parliament with shares to get favorable laws passed, essentially legalizing their own fraud. It was corruption on an epic scale. But a bubble, by its very nature, has to pop. Gravity always wins. By late summer of 1720, a few smart investors started to realize something was wrong. The promised riches from South America never appeared. There were no treasure fleets. The company wasn't actually doing anything. A few people started to sell, then a few more, and then the panic began. It started as a trickle, then became a flood. Everyone rushed for the exits at once. The stock price, which had peaked near $1,000, began to plummet. It fell to $800, then $600, then $400. By September, the house of cards had completely collapsed. The stock crashed back down to below $200. The fallout was catastrophic. Fortunes were wiped out overnight. People who were paper millionaires in June were beggars by October. Prominent lords, merchants, and thousands of ordinary families were utterly ruined. The public was furious. They had been lied to, cheated, and robbed. The directors of the company, once celebrated as financial wizards, were now public enemy number one. They were hunted down, their estates were confiscated to compensate investors, and some were thrown into the Tower of London. Sir Isaac Newton, the genius who discovered gravity, lost a fortune, equivalent to millions in today's money. He later lamented, "I can calculate the motion of heavenly bodies, but not the madness of people." So, what can we learn from this 300-year-old disaster? The lessons are timeless. First, beware of hype. When an investment promises guaranteed, unbelievable returns with little risk, be skeptical. If it sounds too good to be true, it almost certainly is. The South Sea Company sold a story, not a business. Second, understand what you're investing in. The people who lost everything had no idea that the company's trade monopoly was worthless. They just heard South Seas and gold. Do your own research. Don't just follow the crowd. The crowd is often running towards a cliff. And third, be wary of insider dealings and corporate fraud. The South Sea directors used their position to enrich themselves at the public's expense. This kind of corruption didn't die in the 18th century. We see echoes of it in modern scandals. Always look for transparency and accountability in the companies you invest in. The South Sea bubble was a painful lesson in human psychology. Our greed, our fear of missing out, and our tendency to believe a good story over hard facts. It's a warning from history that is just as relevant in our age of meme stocks, crypto crazes, and a 24/7 news cycle that thrives on hype. It makes you think, doesn't it? The technology changes, the company names change, but the patterns of human behavior stay remarkably the same. So here's a question for you. What modern investment trends or hot stocks today remind you of the South Sea bubble? Let me know your thoughts in the comments below. Thanks for watching. If you found this piece of history fascinating, please hit that like button and subscribe for more deep dives into the stories that shaped our world. See you next time.